Welcome to today's market report.
Global shares tried to extend gains on Thursday on renewed hopes for fresh US stimulus measures, but mounting uncertainty ahead of America's presidential election and the technical problems in Japan kept gains in check. S&P 500 futures rose 0.6% in Asia, extending Wall Street shares rebound overnight after strong employment data and talk of progress on long-delayed COVID-19 relief legislation. S&P gained 0.83% and Nasdaq added 0.74% yesterday, even though they wrapped up September with their first monthly decline since March, when a mandated coronavirus shutdown slammed the economy. A spate of economic data mostly surprised to the upside, with ADP National Employment Index blowing past analysts' expectations and pending home sales surging to an all-time high. The US data is surprisingly strong, so that underpins the market, but I don't expect a clear-cut trend in markets until we see the outcome of the US election, says Hirokazu Kabeya, Chief Global Strategist at Daiwa Security. Also helping to book risk appetite, U.S. House of Representatives Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin both expressed hope for a breakthrough in partisan stimulus negotiations. But many market participants remained cautious after Tuesday's chaotic presidential debate, which heightened fears that a disputed ballot on November the 3rd could lead to a long and messy transfer of power. Global investors may be pulling back from the US as the election approaches and the political dysfunction in Washington is laid bare. But they also need to take into consideration that a weaker US economy could presage a weaker global economy, which may drive investors to safe haven assets. In the currency market, GBP USD is navigating in the 127.50 to 130 range. The pair was soaring to a high of 129.45 overnight. The strong and swift advance appears to be running ahead of itself. That said, there is no sign of weakness just yet, and GBP could test the next resistance at 129.60 before a more sustained pullback can be expected. For today, 130 is not expected to come under threat. Economists at Credit Suisse see GBP remaining at a risk of a final rout ahead of any Brexit deal being agreed, due to the necessary theatrical events ahead of that outcome. A new test of euro against GBP at 2020 high around 0.94 seems very possible in the next coming weeks, at which point it would finally make sense to buy GBP, looking for an eventual deal. COVID-19 resurgence pushes the UK towards defying the claims of no national lockdowns finally, while readiness to compromise on Brexit seems to have pushed the trade negotiation talks, which in turn keeps pair traders optimistic. GBP USD prints mild gains after snapping a 3-month rise in September. Reuters reported COVID-19 accelerating quite rapidly in parts of the UK, whilst the US Food and Drug Administration's inquiry into AstraZeneca's vaccine trials with Oxford University offers additional worries concerning the pandemic. Moving on, the second reading of the UK September month manufacturing PMI is expected to confirm the 54.3 initial forecasts, while BOE's Howden may continue negating the negative rates and help GBP USD both, though the anticipated rise in the US ISM manufacturing PMI from 56 to 56.3 may join likely American aid package to record a pair sellers. The cable GBP USD rises for the fourth consecutive day by crossing the 50-day EMA amid bullish MACD. Considering the momentum strength, the quote is expected to attack the descending trend line from September the 10th at 129.57 now. Eurodollar has been advancing on high hopes for a US fiscal deal after falling by 1.82% in September, confirming its biggest single-month percentage decline since July 2019. A potential deadlock in talks, fears of a contested election, and rising US cases may come to haunt the pair. According to the FX Street, Eurodollar is benefiting from upside momentum and has secured its move above the 50 SMA. However, the relative strength index is near 70, closer to overbought conditions. The dollar weakened in early European trades this morning, falling to a one-week low as fresh hopes of new US fiscal stimulus prompted traders to seek out the perceived riskier currencies. The dollar index was down 0.1% at 93.875. This is today's market news. Thanks for listening. We'll see you next time.